This is Rick Rowe for Rule Investment Media, sponsors of the 2024 Natural Resources Investment Symposium. This year held July 7 through 11, either live in Boca Raton, Florida, or in the comfort and convenience of your own home via live stream. However you choose to attend, we will present more valuable content in 60 hours than you can absorb in the 4 days that we have available for you. To that end, the conference is being recorded so that you can access the information several times in order to understand it all. Further to that end, we are interviewing every single exhibitor and speaker who will be at the conference before the conference so that you can learn more about the exhibitors and contact the exhibitors before the conference and during the conference. Further, it's important that you understand that every public company exhibitor at this conference, unlike any other investment conference that I know of in the world, has been personally vetted by myself. I am a shareholder of every public company investor. If I am not, partnerships or investment vehicles owned partly and managed by myself are shareholders. So every single exhibitor has been vetted. As part of this process, I'm interviewing today a friend of some longstanding of mine, Amir Adnani. I've known him since he was a very young man through several corporate adventures, but the ones that we've known each other the best through have been uranium adventures. Amir, despite your young age, I've been investing for you and with you for the better part of 2 decades. Thank you for your effort on behalf of investors, in particular me, and thank you for your ongoing support of our symposiums and boot camps. It's a pleasure to welcome you.
Hey, Rick, thank you for having me, and excited about this year's conference. The pleasure is all mine, and delighted to talk uranium, because you and I, at least you've been on it longer than I have, but I've been on this journey for 2 decades now. From the very beginning, I've had the benefit of having you as a key shareholder and backer. And here we are, finally, after 18 bad years, we've got the markets opening up, and we've got a decent uranium tape.
Well, I would argue, Amir, that for both you and I, those 18 bad years weren't bad years. In order to buy low and sell high, one must first buy low. So let's talk about your activity in the uranium business over the last 18 years. Talk to us about the conception of uranium energy and the implementation, utilizing the down years to take advantage of your competition's distress in order to set you up for what you and I both believe will be a good decade.
Right out of the gate in 2005, what we saw in the uranium market was an opportunity to join the exclusive club of producers. There's a scarcity of suppliers or producers in the uranium business, and they're all either government controlled or have a history of having been government controlled. 2010, within 5 years of a business plan, UEC was producing uranium in South Texas. So execution was there, but we got unlucky with Fukushima happening in 2011. And when uranium prices really falling into a bear market for the better part of 12 years from 2011 on, we went on a very aggressive acquisition spree. We've done close to $1 billion of acquisitions of physical uranium, idled mines, advanced stage resource projects, when uranium prices were between $20 to $40 per pound. And now uranium prices are over $90 per pound. So yes, those were bad or difficult or hard years. But Rick, we took maximum advantage of those difficult years by being counter-cyclical and true contrarians. Of course, we've had many patient shareholders along the journey, and to be able to make acquisitions near the bottom of the cycle means having like-minded supporters and backers like yourself with us. But the reality is no other uranium company on the planet did $1 billion of acquisitions like we did near the cycle lows. So today, I would say we've got a whole new page of an opportunity set in front of us, which I'm sure we're going to get into. But that's the quick background on UEC. And the vision still is join the producer club. In the coming months, we're proud to be restarting our Wyoming mining operations in the US and continue to build a solid, low-cost uranium business that can grow for years to come.
One would argue that there are at least 4 or perhaps 5 value points in UEC. The first, of course, would be the original South Texas producing hub, which we'll talk about, then the Wyoming hub, a more recent foray into the sort of epicenter of the uranium business, which is to say Saskatchewan, and then your fortuitous purchase of physical uranium, and of course your fortress-like balance sheet. So let's start first of all with the genesis of the company, what you're doing in South Texas.
South Texas is the least explored uranium area in the United States, according to the USGS, by the way, too, that has the biggest potential for uranium, where uranium can be found alongside hydrocarbon deposits, which South Texas has plenty of. So you think about the big potential of South Texas, and it's really embedded in exploration and low-cost production using the solution mining method. Half of global mining of uranium uses in situ recovery, and South Texas has the right geology for that. So that's been home for UEC for 20 years now. We're in 4 different counties. We got a central processing plant. We've got the ability to quickly turn these low-cost ISR projects into assets. When we talk about building an ISR mine, we talk about it in the context of tens of millions of dollars of CapEx compared to billions of dollars of CapEx and open pit or underground mining. So there's a tremendous capital intensity advantage. Wyoming, after Kazakhstan, is the most significant jurisdiction in the world for in situ recovery of uranium. Over 250 million pounds of uranium have been recovered there. We always wanted to be there. We just didn't have the right acquisition opportunity. And before Russia's invasion of Ukraine, we found that opportunity, and it was in the form of Uranium One, a wholly owned company of Rosatom, Russia's state nuclear energy company. We acquired it, and inside of that company, Rick, is the biggest collection of U.S. uranium assets. There's a book written about it called Clinton Cash, if you're interested as to how the Russians ended up with such formidable uranium assets on U.S. soil. But the reality is now it's been repatriated into a U.S. company. We're restarting production there. And inside Texas and Wyoming, you've got 2 central processing plants, permitted, built, ready to go, and 7 fully permitted mines. The only thing here that was missing for UEC was how to gain the bigger picture size and scale that high-grade conventional mines of Canada offer. And to that end, we figure let's become the first company that combines low-cost US ISR production that's quick to restart with those larger Canadian assets for future development. That's where the Rough Rider project comes in, which is the only deposit in the Athabasca Basin that majors have fought over. And Rough Rider was the subject of a bidding war between Rio Tinto and Cameco in 2012. Rio paid $600 million for it, decided in 2019 to exit, and we were able to come in and buy it for $140 million, giving us the highest grade development stage, shallow deposits in the Athabasca Basin. That's now the centerpiece of our Canadian operation. So you've got US production combined with long-term world-class production coming from Rough Rider. We've got a property portfolio of 1 million acres in Athabasca Basin beyond Rough Rider that gives us exploration potential. And all of that, to me, Rick, is really backed by, as you put it, a very strong balance sheet, over $330 million of cash, physical uranium that we were buying when uranium was at $25 or $30 per pound. So we've got a huge gain on our hand. And when companies were busy signing long-term contracts to sell uranium, Cameco was selling long-term contracts, signing them with $70 ceilings. We were busy signing contracts to buy uranium. So we have another 1 million pounds of uranium that we're purchasing, not selling, purchasing over the next year at $39 cost when uranium's at 92. There's another $50 million of unrealized gains just in that. So really, you've got a debt-free balance sheet. You've got ample firepower in terms of cash and physical uranium, and even more physical uranium coming to us in addition to our production. And finally, Rick, we're unhedged. We didn't sign long-term contracts with ceilings at $70 or $80. We didn't encumber the future production. We're wide open, and we can sell to the US government like we did last year at a 20% premium. We can sell to Bill Gates' TerraPower, who's breaking ground, building a new small modular reactor. Next Monday, we're going to the groundbreaking ceremony. Everyone should pay attention to that. That's the first SMR being built in this country. It's going to help power data centers, a huge source of growth and demand for energy. We're going to supply the uranium for Mr. Gates and his new small modular reactor. And really, the world is wide open with all the positive demand signals that we're seeing for nuclear energy. I don't think we're going to have any problem selling the uranium. The question is, let's remain unhedged so we can get that maximum upside exposure.
Tell us something about your production schedule. I don't want you to give any guidance or do anything like that. I don't want compliance problems for either you or I. But tell us something about when we might expect production from Wyoming, when Wyoming might scale up to full production, and when, if you can disclose this, would you hope to commence production in South Texas to complement the Wyoming production?
Yeah, and I think just to step back for a second, and for the listeners to appreciate this, there are basically two companies on the planet today that can turn or restart production of uranium. One is called Paladin, that has the Langer Heinrich mine in Namibia that Rick, you know very well. And the other one is UEC with the Uranium One assets in Wyoming and the Texas operations that we have. We're basically brownfield operations. These are restarts, which means we don't have to go through all the initial CapEx funding and construction and all the work that a brand new project would need to have. What we've announced so far is that the restart from our Wyoming operations will occur by August of this year, 2024. And we're very much on track for that. And as we get closer and the restart occurs, we'll have more announcements, and then we'll get into the quarterly reporting of that. The other company that did announce this earlier this year were our friends at Paladin. So there's really just two companies in the world that have announced this. And we did see a very positive response in the month of March from the market to Paladin's share price on the back of the production finally getting switched on. So we're excited about this production re-rating that we have coming up at UEC as we transition away from being another exploration development company, but an actual producer. And by next year, we'll add the Texas restart to the plans as well. So the goal here is to start producing from Wyoming by August of this year. We'll have a formal announcement about the exact time of production in Texas next year, but it is a goal for next year. And we'll be producing out of two states at a very important time, Rick, because the US is now consuming 50 million pounds of uranium. That's 50. The Department of Energy wants to create a strategic uranium reserve. Mr. Bill Gates, Sam Altman, Elon Musk are all trying to build some form of SMR or advanced reactor to power their data center needs. And all of that needs uranium that comes from secure, reliable sources. And nothing is more secure and reliable than a source coming from Texas and Wyoming.
Tell us something based on feasibility studies of what your production profile would look like at full production from Texas and Wyoming. What is not the exact number, but the sort of order of magnitude annual production from those two sources?
Our annual licensed capacity at our Arigari processing plant, our Reno Creek project, and our Hobson processing plant in South Texas totals 8.5 million pounds of production. It's going to take a number of years to ramp up production because we have to hire and train additional workforce, get the rigs and other available supply sources we need to really build and scale up this production. Audience has to remember that the industry has been dormant for over a decade, but we're in the pole position to be able to really take advantage of our fully permitted projects, licensed capacity that we have to ramp up production faster than any other company. Again, this will be a multi-year ramp. And again, as we start the production, there'll be further information the company will provide in terms of volumes of production for year 1, 2, 3, etc. But just like our peers have, as you go into that production phase, Rick, your initial focus really is in hiring and training personnel, getting everything going. And so far, we're really on good track to do that. And we're really fortunate that we're in states that have already a good workforce that is either previously has worked in uranium industry or is currently working in oil and gas or other kind of resource extractive industries that you can draw from and have comparable relevant skill set that you can adapt to what a uranium operation is going to be.
Amir, finally, to the extent that our attendees want to reach out to your company and learn more about it in anticipation of meeting you in Boca Raton, who do they talk to and how do they reach that person?
Rick, specifically for this conference and your attendees, we've asked Bruce Nicholson, who not only is our VP of Corporate Development, but Bruce has over 20 years of experience as a sell-side mining analyst, as a hedge fund manager covering the metals and mining sector. He's probably one of the most versed individuals I know in the uranium sector. He eats, breathes, and lives it every day. Bruce is available and standing by to take calls and emails from your attendees. Bruce's email is bnicholson, that's Bruce Nicholson, so his first initial and his last name, bnicholson@uraniumenergy.com. And I'm going to do something else. I'm going to give out his mobile number. You call him directly and you tell him you're a Rick Rule attendee. His mobile number is 732-233-6885. You call him directly. If you have any questions, let him know you're going to be attending the conference. He's wonderful to speak to, wealth of information, and I think people will enjoy that.
Amir, thank you for 20 years of toil on behalf of uranium investors, in particular this uranium investor. And thank you, too, for your ongoing sponsorship and support of the Natural Resources Investment Symposium and our boot camps. It'll be a pleasure to host you in Boca.
Rick, thank you for 20 years of your patience and commitment to the cause and supporting UEC to get to the point that it is, and look forward to another exciting and amazing conference. Thanks for all the work that you and Albert do.
Thank you.